Welcome to Subramani. So you see, I've more or less given up on my coat, but I will continue to wear it sometimes, once in a while. So I was talking about something called alternative investments, right? What are the alternatives in which you can invest? It's a new economic paradigm, if I should say, that advantages of adding alternative investments to your portfolio. Today it is possible to add. Should you do it? Should you not do it? I will leave it to you. But I think the cutoff should be at least 1 million US dollars. So unless you have a portfolio of about 7-8 crores at least, don't think of alternative investments. You don't need it so much, right? You can be happy with your mutual funds. Though of course, if you go to some person who is handling mutual funds and runs his own PMS, chances are he will want you to shift to his PMS, which makes sense because he understands how much risk you should take and all that. But that I leave it to you. The investment landscape still remains part of the history, and therefore all markets look high to me. I'm shooting this in March 2025. I may repeat it later, but I think market looks high in most parts of the world. US market is also high. It is 70% of the world market capitalization. It's never been so high before, right? Not after the new era has started. China is going up. India is definitely high. Whatever you say, whatever people look at valuation, there are people like Ridham Desai who say India has already reached the bottom and it will only move up from here. Maybe it will. Maybe the SIP inflows won't stop. Maybe it will come down to 25,000 crores from 29,000 crores, but it will continue to happen. So there will be buying. If there is no FII selling, what will people buy? But that's not a good question to ask, simply because corporate paper will find its way, right? Your Paytm, your Zomato, all of them came at atrociously priced IPOs. A lot of NFOs coming, so mutual funds will invest. Does not matter where you. I mean, there was this IPO of a company called Carraro. Carraro came at a price of 700 rupees, and there were mutual funds, etc., which took it at that price. So I'm not getting into market valuation. It's not a right time to be talking about it. But when you have in 2025, when it begins, and you're sitting on some cash and you're wondering whether to deploy the cash, you can look at alternative investments. Like I said, only if you are willing to. Only if you're willing to. I'll say who should not do also, or rather who should do. So first of all, private markets have a much wider range. You can invest in global REITs, you can invest in Indian REITs, you can invest in private equity deals for real estate. And then private equity itself, you can invest in good yield shares in, say, Korea, Japan, right? All those things you can invest because you are private equity. You will not be able to find good mutual fund which invests in all those markets in a proportion and a ratio that you want to. So that is one huge advantage. Private markets provide access to maybe 10 times more companies than public markets. Remember, when you're talking of private investing, you're also doing public investing, right? Only a portion of it is private investing. So private investing gives you a greater range, a broad spectrum of non-traded sectors, right? So you can invest in a startup fund in Taiwan, right? You can't access that from in your public equity, right? You also should assume an appropriate horizon. Don't invest in all these assets if you are 70 years of age. You may not be alive to see it go through. So you have to be younger, or you have to say, I'm investing for my grandson or my granddaughter or somebody like that, and not for myself. Because all these private deals with whoever has come to me, assets are 7 years, but the 7 years means nothing. 7 years later, if the market is down, they'll come back and say, look, we wanted to sell at a PE of 30, we are only getting a PE of 12 or something like that. These are all great stories to hear, but as far as you're concerned, assume an appropriate investment horizon. When somebody says 7 years, assume 20 years, right? So maybe after 3-4 years, when there is a dilution and there's second round, third round, fourth round of funding, maybe you can get out, but a proper listing may take 12 years or 13 years and not just 7 years. So take a longish thing. you should never ever have to sell this in a distress, because you will not be able to. They are the people who will come and say, no, don't worry, we will find some other investor who's willing to take. That other investor will take not a haircut but a head cut, right? So these private deals are very difficult to get. So don't do that. A corollary to that, look at your liquidity needs. Suppose next 20 years expenses of yours is lying already in our old theory, bucket theory, or bucket 1 and bucket 2, then hardly matters. So this is definitely part of your bucket 3. You are not going to get great returns immediately, or it's going to take a lot of time. And where do these people invest? Where do these private deals, alternative, where do they invest? First, private real estate, right? Then private equity itself. Then private credit. They give credit which is perhaps assuming a higher level of risk than what Reserve Bank of India is willing to do. They may be willing to give credit to a grocery shop, right? A grocery shop, typically when they go to a bank, the bank will say, look, you're buying on credit, you're selling in cash, why do you need credit, right? So why do you need credit? We will not give you credit. We are very clear, we are RBI, so we will not give you credit. Whereas that fellow says, no, I need if I have more money, I will buy more stock, I'll make a cash payment, I'll make a cash down payment, I'll get 3% discount, 4% discount. So I have need for money. As a private lender, you're only looking at two things. Does he have the willingness to repay? Does he have the ability to repay? He's got a shop in which he's doing maybe 5 lakhs per day turnover. Why can't I lend him 25 lakhs? Why can't I lend him 50 lakhs, right? Any of those small amounts. In a private equity deal, maybe that is the size of the deal. But of course, if you're a banker and you look at his pay account, your GPay account, BeamPay account, whatever, and you realize that this guy is doing 4 lakhs of sale just through BeamPay, then you look at him with renewed respect and say, I can also give you a loan. But that apart, I'm digressing. So private equity, private real estate, private debt, right, or private credit, as you would call it, that is one thing. Nowadays, I also find even in India, somebody coming and saying, look, 10 of us together or 20 of us together can get together and do some corporate farming, right? So that is also happening, but that's not so much visible in the public eye. But yes, it is happening. So here you get in touch with 10 farmers, 20 farmers and say, okay, I will fund this. You may not be buying the farmland, but you may be funding his life. You may be paying for the seeds, you may be paying for the insurance, etc. And then you go 50-50 on the crop and you sell it. Can you do this? Yes, you can do it. Is that farm income and tax free? No, it is not. It is farm income only in the hands of the farmer. The farmer can gift you some money. That's a different thing. That is for Nirmala Sitharaman to worry about. But yeah, farmland is also something which you can think of in private equity. Advisors who believe that their real value lies on the investment side, that is via customized portfolio design, particularly for a younger generation of clients who have got a lot of money, who will not just believe, say, just do indexing and be safe. It's a stupid theory, but then people who say that, right? So they may want some more personalization of their portfolio and in so many other aspects. So they may consider some of these as a part of their strategic mix. Who should not do? Somebody who needs this money should not do. If your net worth is 2 crores, you cannot go and put 50 lakhs in a PMS. You just can't. Though of course I know people who do. So when your PMS, your AIF, your other alternative investments should not be something which you should turn to in case of an emergency. You should have built enough cash cushion. You should have adequate medical insurance, etc., which will pay. It's not something which will be rejected. Lots of mutual funds, etc. After you have built that, only then should you look at this, simply because the risks are too high in terms of liquidity, in terms of wiping out the capital. It's possible that you put money, say 50 lakhs in one real estate PMS, and he says, boss, the price is just not moving. We have put in 50 lakhs, that is worth about 20 lakhs now. You may have to do that also. So the ability to take risk, the need to take risk, all that comes into play when you're looking at alternatives. And very importantly, if your time frame is not 20 years, it could go wrong. That's it. Thank you.